joining in with that. Let's go across to Sunny Agrawal from SBI Securities now to discuss the market fundamentals. Sunny, thank you so much for joining in. What is the market factoring in? Is it the tariff situation? Because we still have till 26th of August to get the next round of negotiations as well. Is it earnings? Because it's the sixth consecutive week of losses that we saw on the Nifty, but today we are seeing some green. What, according to you, will be the next big trigger for the markets?
Good morning and thanks for having me on the show. I think, definitely. I think trade tariff negotiation is something which is a big overhang on the market, and that is leading to weaker sentiment as far as the last trade is concerned. But I think going forward, ultimately, markets are driven by the earning growth, and even the earning growth this quarter has been kind of a mixed bag. Even within a sector, we are seeing a few companies reporting a better earning compared to their peers. So I think September quarter onwards, we believe that the earning for Nifty50 and broader universe should scale back to a double digit. If you remember, last September quarter was the first quarter year over year where we have seen a kind of slowdown in pace of earning growth due to the lower government capex. And on the low base, we are expecting that September quarter onwards, the earnings should rebound to double digit, and that should at least help the market to sustain at the current valuation, which is close to 20 times 1 year forward price to earning multiple. Having said that, we believe that at current juncture, the action is stock specific. The companies which are delivering a decent set of numbers with an healthy growth visibility over the period of next 4 to 8 quarters, their street is rewarding those companies. So I think going forward, anyway, market is likely to be a stock specific.
Sunny, hi. Morning, Reema here. Talk to us about Tata Motors. Numbers were okay. Their EBITDA was down 35%. The company said that the tariff impact would be 500 to 600 million pounds in FY25 itself. But the stock is up 2.5%. What is it that the street is excited about, post the numbers or from the commentary or looking ahead?
So coming to Tata Motors, I think most of the negatives were already in the price. So we have already seen that stock has corrected from highs of close to 1100 to now trading close to 700, 600 price band. And I think anyway, Tata Motors has cautioned the street on the weaker growth expectation for the fiscal year 26. And on the top of that, because of the global uncertainty, we have already seen a weaker set of numbers reported by Tata Motors. So I think on valuation front, we feel that most of the negatives are priced in, and hence we have not seen an adverse reaction in today's trade. Once we get more clarity on a growth trajectory as far as the both the domestic portfolio on passenger vehicle as well as on international front JLR portfolio, at that point of time, street will start rewarding Tata Motors shareholder. At a current juncture, we believe that M&M is relatively well placed, and hence that stock is also trading close to 52-week high. Both the businesses firing simultaneously. One is passenger vehicle and other is farm equipment segment. So we have got a buy call on M&M with a fair value of 3,600.
Sunny, what about the recent listings, the two major ones that have listed in the last 2 months? HDB Financial is one of them. It was a somber listing, and since then the stock has only flattered to deceive. It's only now back to its IPO price. Whereas on the flip side, NSDL has moved from 800 to 1400 plus and has now seen a very, very sharp correction over the last few minutes. Would you advise booking profits here in NSDL, considering the move that it has seen? And also if you have a view on HDB Financial.
So coming to NSDL, definitely at the time of listing, the valuations were relatively cheaper as compared to its peer CDSL. And now post recent run up, now I think the valuation catch-up game is over. Sorry. And going forward, in case NSDL is able to catch up on a retail side in terms of market share gain on account opening front, we believe that NSDL can sustain a relatively expensive valuation compared to CDSL. So we need to track the data. Yes, obviously, if somebody has got an allotment during an IPO, we have seen a very decent up move. And if somebody was looking for a short to medium term gain, one they can look to book the profit. But if somebody is a long term investor, I think any dip over the period of next 5 to 10 days can be a good opportunity to add to the portfolio. Coming to HDB Financial Services, again, as we have seen that certain pockets are witnessing an asset quality issue, whether it is MFI or unsecured book, and that is something which is weighing on all the NBFCs company. And we have recently seen some NBFC's company, NBFCs are reducing their growth guidance, and that can have an rub-off effect on other financial services or NBFCs firms like HDB Financial Services. I think, again, long term, we believe the growth opportunity for this entire NBFC industry is very well, and going forward, maybe 12 to 13% kind of advances growth. It should not be an issue for large players like HDB Financial Services. I think any correction is a good opportunity to accumulate in the portfolio.
Okay, so that's about some of the new listings. Sunny, what about these oil marketing companies? This particular announcement of compensation of 30,000 crore rupees, it is positive, of course, but the stocks have come off from the highs of the day. What take do you have on the entire space?
Yeah, so coming to oil marketing companies, yes, definitely, I think this news flow was positive, but I believe that the ongoing trade negotiation wherein there can be an reduction in a sourcing of a discounted crude from Russia, that can have some a negative sentimental impact as far as oil marketing companies are concerned. We believe that on valuation front, anyway, oil marketing companies are trading at a very reasonable valuation. So downside is limited, risk reward continue to remain favorable. I think again here our top pick will continue to remain HPCL. So once this trade deal overhang is through us, then we may see again a bounce back in all the oil marketing companies. But if I have to pick one stock, HPCL is the one stock wherein we believe the fair value is close to 480 rupees.
Okay, HPCL, so about a 20% upside from current levels, 480, the preferred pick. Thank you very much, Sunny, for joining in. Get into a break. On the other side, we'll put the spotlight on buzzing stocks like Yatra Online and Siemens.